All right, cool. What's up, everybody? Welcome back. Another week under our belt here. Just coming live. Or I guess not live anymore, but we're gonna here talk about some of the events that happened this week, some of the fun that we had, and some of the trades we made. Heat, how you doing today?
Doing all right. It's a great day. And, as always, what we're going to talk about here is not financial advice. These are just the simple things we do every day, try to make everybody around us successful. These are all ideas. Don't take this as any by yourself signal.
Yep. Good point right there. Get it right out the way. Definitely not a financial advisor. And then if you do stumble upon this and you want to join us, you could hit the link down below. We've got a Discord community of people, traders, growing every day and learning from each other and having fun while we do it. It's free. We have a lot of fun in there, so you could always hit that link and join anytime during this. It won't. All right. So I know last week we had chatted and I just posted actually this week. So right now it's Sunday or Saturday, February 12th. We filmed the last Sunday and then we posted it. I posted it today. So it's a little bit backtracked on, it's probably 2 weeks ago then that we were reviewing, right? Since we did it last week, it would have been 2 weeks ago that we were reviewing, but we were talking about this SPY. So you got behind me, the SPY is behind me. Which is the S&P 500 ETF trust. It's like pretty much what moves a lot of the technology, large cap technologies, or I guess I should say they move it because I tend to notice they kind of move the SPY themselves, which direction they're going. But anyway, we made a couple predictions on it and we were looking at some projections and, a lot of negative catalysts hit, in the past 2 weeks, I would say. We got this rising fears of potential war with Russia. We've got CPI data, the job claims came out. We had a lot of negative catalysts, but we were kind of talking about this is the daily on SPY here, and it was like forming, it had this little head and shoulders here that hit, but it was also forming in a bigger picture here, this head and shoulders. And we were talking about it. I believe we were probably like right in here when we were talking about it, and it popped up, shouldered, and now we're currently on the backside. So I know we had hit quite a few home runs on the SPY the past week. What do you think, Pete? What do you think's to come with this thing?
SPY itself. I mean, I'm personally looking at the 1 hour.
Hold on.
I'm preferable to the daily because SPY, the dailies. It's just gonna be a range trade, but I know we mentioned last week about that double top and, capitalizing on puts. So congratulations on either winning those puts with us.
You're talking about this one, right? Where we topped out here and then topped out here.
Yeah. So you had that two double top, then you had a second shoulder coming up. So first shoulder would be like 207 at 1700. And then the peak of the second shoulder was on 211.
Gotcha.
So it's coming off a double top, and it just nose dove. I know the Russian invasion definitely. I don't foresee SPY, taking anything in the 460, 470 range anytime. I think we're in a nice, solid, confirmed downtrend. So.
Yeah, I think this would have confirmed it, right? So it tried to reverse, right? It came down. I just moved one of my supports. Came down and it double bottomed here. And then, it pushed up and it hit this resistance. And this is a key. I mentioned this in the chat a couple times. This 458 level, right, is super strong. It rejected here originally on the downtrend and then came down. It's rejected it in the past. It's held it as support in the past. So it's a historical mark. This was a very key level here. And it came back up and it rejected it. It came down, chopped, right? We were in that chop for like all last week. And then like you said, we were bull rush a little bit on Wednesday, Thursday area up into here, which forms this, this there's shoulder head that you were talking about.
Mhm.
Rejected it again, but it rejected it like 3 times that day, 4 times that day. And then after that, plus you got, the CPI data hit, plus you got Putin, getting ready to fucking nuke everybody. So yeah, just it after that like fourth reject, it was just like hammer time pretty much.
And about the like the CPI, I don't. That's not going to change. That's only going to get worse.
Oh yeah.
Have to raise rates if they want to slow that down. I mean, inflation won't slow down until the Fed takes action. Like the whole Russia thing, honestly, I don't. He may not. He may just be posturing, but that doesn't really matter. Uncertainty is what breeds the big moves. And
Yeah.
I mean, just the thought, and that was just a press conference saying, we can't confirm nor deny. It just looks like, it may be coming. So U.S. Citizens leave, come back home. We're not coming to help you.
Yeah, I
Just
seen that. I was a little wild, and we're not coming to help you. I was like, ooh, we're in trouble here.
he was giving everybody time to leave. Like early next week, they could be moving in. So
I thought that was a little strange too, that they were, I guess it was just a projection, right? But the way that they made it sound was like Putin plans to invade next week. Like who plans and gives out the dates, the roundabout time, you know what I mean? Like who really knows if he's going to actually invade next week? It could be any second. It could never happen. But like, I just
yeah,
thought that was a little weird how that, I don't know. I don't trust any of the governments anymore.
maybe, or hey, go ahead and get your people out. We don't want to kill any Americans. So
Oh
I
yeah, I guess that could have been an effect. Yeah, go get your
the
people out.
last thing he
But
do was start popping U.S. citizens.
yeah,
You
yeah, no,
know,
he's there for a purpose. Yeah, makes sense. Okay, that makes a little more sense. Yeah. So yeah, I mean, we talked about this on the last episode, Spy. Our projections on it, and so far so good. I know it's not good for a lot of the bulls, but we hit it pretty much on the head, I would say. We knew this was coming, and we were prepared. We all, especially in the chats, we had a whole slew of SPY contracts alerted to the downside, and we had multiple 100, 200, 300, 400% calls off of this. So it was definitely profit. It gave us some nice profits for sure, being on point with this.
and I think the big ETF is the way to go for a little while. With the instability, small caps have been hot garbage again.
Yep.
It looks like he had that cobble squeeze last week. It looks like it's still going to go on for a little while.
Well, yeah, that one was this chart was freaking. We caught this the first leg off that inside bar. Remember, we had gotten in at like $1.07. I remember I was posting it in the chat, that inside bar, the original. And look at this thing; it just inside bar legged up 3 times. If I can get this damn chart. This is
Yeah.
the daily here. You got the inside bar. This is where we got in right around here, 107 area, right around
Mm-hmm.
mid candle. And then, yep, popped up, inside bar, popped up, inside bar, popped up. So now it looks like it's topped out. This is a huge seller's wick, and there's no way for this to keep trend, that inside bar trend. It's toast now, in my opinion, but we'll see. I mean, I caught some short up here on Friday. I missed the long for Friday.
Short interest is on it, but I mean, it looks like a squeeze. Like it looks like there's a lot of buyer pressure. It's cheap enough that people can come in. It looks like from that drop from 47 back
Yeah, I
in.
mean, it had a gap to fill, so this was my interest too. So over this, so that first original inside bar, I didn't expect it going all the way to 3, but it has, that
That's
second and third one. If it would have held this trend, but look, you see, it hit this resistance. So this is a pretty strong resistance area here. It's like 292 to 3 area. It hit that and rejected hard. But if it would have broke that, it would have shot up because it's got this giant gap. We would have seen 440s easy.
on the hourly daily.
I'm on the daily. I'm looking at the daily. That's where the inside bar pattern. It legged up 3 times off of that, and then it's just got this mean seller's wick from the top here.
Switch over to the hourly. Look at that bottom trend line. I mean, it's holding solid.
Yeah, I mean, if it can hold, if you're looking at this right here, hold on. Looking at something like this, right? Something like that,
Yeah.
right?
You still on the daily?
Oh no, I'm on the hourly now.
Uh,
Yeah, so
the,
that's how it kept happening. It popped up, made that inside bar on the daily with this consolidation. We'll see. I would need it to consolidate all the way to this trend line here, like it's been doing, and then I would
it's gonna
probably consider going long on it.
look
We'll
at the
see
top.
though.
That megaphone you were talking about the other day. That top trend.
Yeah.
It looks like it could keep going as long as it doesn't break that bottom trend. I mean, it looks. I mean, I'm bullish on it as long as it can pop off that line.
Yeah, so we'll keep this on watch for next week for sure. Another big one that was this week was DCFC, right? I caught it a couple times long. So Biden tweeted about this company. I caught the short end of this, really the majority, but I did catch it early on the long side. I had like 9s on it a couple days back. Oh, if I can see the whole chart here, it would be nice. I guess that is the whole chart. But yeah, I had like 9 somewhere in here, and I caught a couple pops on it, but caught it up here short over 18 was the move. This was a nice one. Fade all day fader. It was like 2-day fader. Thing faded like almost 60% of its gains.
Yeah, I didn't get in any equities really last week. I mean, this chart's nuts. It looks like a nice range trader.
Oh man, it was. I mean, it was no DWAC, that's for sure, but it definitely made a move for sure. I mean, it went from $6 to in 3 days it ran all the way up to 20. So it's a nice range. And then this right here was the sign to try and start to look short, was this big seller's wick, and then they tried to push again, rejected again, pushed down, and then it just started to fade, and that was it. And we caught it like right over here off of this pop here on the 18 mark there, short, and swung it down. Ended up covering somewhere in like the 10-11 area, so it was nice. That was like my big play of the week. I swung it overnight, had a nice size position, whatever, and I didn't even trade the rest of that day. I woke up, closed out that, and iron that short, and I was like back to sleep.
Wow. Was that a new IPO?
It was an IPO'd a couple. It was an IPO or an uplisting. I think it was an IPO. I'm pretty sure it was an IPO. Yeah, and
not long ago.
Not long ago, like a month ago, not even a month ago. Yeah, about a month ago now, a little under a month ago, the 18th of January. That was a good one. This is one I wanted to talk about though today, was Affirm, right?
Okay.
Affirm that was a volatile move that it made, and you didn't even need to catch the move to make a shit ton of money off of Affirm on that drop. It halted down a couple times, right? Is that what you were saying?
Yeah, halted down a few times that day. Off those leaked earnings. I didn't think earnings were all that bad.
Yeah, they weren't. I went. That's what I said in there. They beat on the revenue, a good size beat. They missed on EPS, but I'm pretty sure it was expected that they were going to miss. But I guess the leakage of it kind of sent everybody into fear, and it just
50%. No, what? How far is
50? It's down 50 something percent from this high up here. A little more. I don't know, about 50%. Yeah.
Off that. I mean, that shouldn't have happened.
On a large cap too. Like I haven't seen moves like that, since COVID, really.
I have a few times. But Do you remember that
Oh,
play that?
Chegg too. Chegg did that two
Yeah,
earnings reports ago. It made that big move, but still, this was nuts. And we were waiting. Me and one of the dudes in Discord been waiting for sub 50 to grab for a long term position.
yeah,
So it knifed down hard. I know I tried to grab right here. I looked for a $49.50 ad, so I threw in an order, shares just to scalp the bounce, and then I was going to re-add for the long term, and I was off by 50 cents. It bounced at 50 exactly. So I missed the long, but the long itself, if you were a sniper and caught this bounce here, $50 went all the way just on this green candle to $62. That's a $12 move in one 15-minute candle, one 5-minute candle, even
I hear
two
you.
5-minute candles.
Do you
But
remember Josh, the play talking about when he was talking about the taking calls in the downtrend? When I clarified in the chat, I was like, "Hey, I do not take calls in the downtrend. This is why." This is the type of play that strategy I've been using for many years. You see this big overextended move that should not happen, right? You'll have probably 1 to 2 days of trickle down, and you'll have a nice retracement of probably 20-30% on that move. I will be taking calls on a firm this week.
Yeah, I got shares in after hours Friday around $45, 45, $46. I grabbed a couple loads of shares, like a tenth of a position, just a feeler to keep eyes on it. But this was one. I know at the top of this peak though, we re-added puts up here. I know Wonder had alerted them, I believe, or chat alerted, and I slapped a couple puts. We hit puts just off of this bounce twice for 100% plus each time. Plus, I went short shares here. I grabbed some shares short here from that 62-ish to 64 range, and I was able to cover, back at 56. Like we were getting 10, 12% moves on this large cap. Like the volatility was just like up, down, up, down. Like it was pretty cool to watch. It was definitely fun to watch. That's what we were talking about last week, was the plentiful opportunities with this volatility. Like there's no reason to be not making money in this market. Like, as who cares if it's going down? Like there's still so much opportunity. Like, it's the mentality that people need to break of just only going to the upside. Like the backside of the trade comes so quick, and it is powerful.
Harder.
Yeah, it's powerful.
Do me a favor, pull up your 1 hour on a firm, and I'm going to tell you why about that play that I just spoke about. Basically, the 3-day calls on an over exaggerated move and the thesis behind it. All right. So eventually algos are going to pick that up and realize that that's going to be a strong buy at a certain price, right? Just like you did. So go back to 11.10 or 11.2 to 11.10. That was your last earnings. You had a nearly identical move on your earnings. You see that? The gap down?
Yeah. And then look at it gapped up.
Look, 3 days later, you got that retrace.
That was kind of more than just a retrace too.
You know what I mean?
Yeah, ripped from down here at 130 all the way up to a tie a day was 165, 166, and then it ended up fading on that day. So that day was a volatile day. So it seems like a firm's earnings, we're going to need to keep on watch every single quarter, because they have some volatile moves. Look here, they beat over here. It looks like, at least it looks like. See, I can pull up the earnings reports. This is what's nice about TradingView, not to advertise for them, but you can pull up the little statistics on the report too, which is nice. So a huge gap up this time. So they've got some volatile reports, or the stock moves volatile, has a huge volatility during their reports.
What I like about it is the aggression that it has on, say, a bounce. Like you got all these peaks and drops, but when it moves, it moves.
Yeah.
What was here? The last earnings on 11.10, that was 106 to 132, and then bounced back 2 days later to 172.
Yeah, this should see a huge bounce. That's why I started scaling into shares because long term, this is a buy in my opinion. But I'm not gonna load too heavy because I think what it's gonna do is it's gonna bounce and then it's gonna fade again because they're gonna need some. For one, the market's fading, and two, it's gonna be a while before I see. Probably till the next earnings report until we see this to start actually see an uptrend like this kind of uptrend that it was on.
Yeah, I don't.
If you look last time, what it did is it IPO'd, it had this move and then it kind of just faded in here. It kind of just chopped for a while. So we'll probably see a similar pattern to, this whole section
I don't
right here.
know.
This whole section right here, we'll probably see a whole little something similar.
It's a nice descending wedge.
Yeah, and then it snapped. So we'll keep an eye on a firm. Like I said, I grabbed some shares on it. If you go calls for the retrace, I'll probably grab some too. That doesn't sound like a bad idea. I'm going to be looking for it to try to claim back over this 48 level here because this is. I was looking at it as we were talking here, and this is the hourly, but I'll pull up on the daily here. It looks like this is a pretty key level here. This 48 level to reclaim is that was the all-time low at one point. Now this is the new. It's actually sitting at just slightly under all-time low. So I'll be looking for it to reclaim that level, and then even this level up here at 56, is going to have some trouble reclaiming, and then up here at 58. So it's got some resistance because of its history, but
I'll fib on that.
Run a fib on it.
Yeah.
Which way? From here down?
Top to bottom.
On the daily? Not on the daily, right?
No, on the hourly. So zoom out.
Oh, whoops. Hold on. Let me delete that. Redo.
Can you zoom in on your candle?
Yeah, I'm gonna.
That's the one thing I don't like about TraderView. You're gonna move it around so much.
Yeah, so you've got there you go.
There you go.
Yeah, so it should it's starting too. So it should break through probably, I mean, at the bare minimum 54, but it should see the 60 level on a retrace at the bare minimum. I don't know if it'll get a full retrace up to the 80s like it did the last earnings. If the market was trending up, I would say, very possibly could have a day where it pumps, 40, 30% like it dropped, but I think a modest 10% would be, that would be a couple 100% on calls.
So 30% of the move would take it back to like 59, 3 to 60.
Yeah. So
I'll probably take 88 calls. I'll figure it out tomorrow. Definitely have nothing to watch this though.
Yeah, Affirm made a nice move. That was fun to watch. Uber too, or Uber was one that had some volatile movement. What was another good one? Z, right? Where we played some puts on Z on Friday. Hit those for, I believe it was like 900% one of the rounds. But we were playing some risky contracts. We were playing the zero dates till Expo, which we do not suggest doing ever. But we were having fun.
Couple on my watch list for this week. You want to pull up Cisco, CSCO?
Did they report yet? CSCO?
CSCO is on Wednesday.
Okay. Jeez Louise.
Look at the range on that. So, I mean,
they got crushed on past couple weeks.
Yeah, but look at the last move on earnings.
Past couple of days, I should say. This is the 5-minute. Oh, I'm looking at the 5-minute. I thought I was looking at the hourly. Here we go. There we go. Here's an hourly. They got a divvy too, earnings. So, yeah, they beat last time.
And I personally believe that they're going to beat again. And I'll send you a message why. But I like.
They missed on their revenue, but they beat on so like last earnings season we were in a bull run, so you could have a slight miss right on one of them, and as long as the other one was good you would run. Now we're seeing like a firm, right? They had a slight miss on EPS but crushed revenue and they just dropped. So I feel like we're gonna need perfect reports to see pushes up, but this could be a good gamble. Let's see what the last earnings did too. So it looks like they've had some jumps the past two, and this time they hit both EPS and rev.
We got to keep all the people that are still at home working. That's
hit.
those are all licenses. All the companies that are moving towards hybrid models now. I mean, I like Cisco long.
It's sitting right at a support level, so it'll be
interesting.
I
loved them into earnings. So
see the support level right here that it's sitting near. It's literally right under this level here. So be good to watch for 53.19 for it to hold that level for call entry for a lotto. And then if you don't like playing the earnings itself, like I'm not too fond of playing the gamble. Like I'll gamble, but I never have too much conviction on it. So I like to wait, like Disney, right? Disney was another one we'll pull up in a second. I didn't play it into earnings, but the second the report came out, at first it originally knifed and then it ripped. I bought that knife up and I caught like a 7-8% move on a large cap with shares. That's pretty, it's a lot of people are like, oh, it's only 8%, but that's a nasty move on these. But yeah, this is a support level here for Cisco to watch for. And then you'd want to see a break up here too, which would be 56.35.
So, I mean, let's save some time at the end. I want to touch on something that was brought up in chat the other day that, the secret sauce, everybody. My play. That the short cover plus. I'm going to let you describe it.
Short cover plus. Yeah, I got you. Yeah, we'll talk about that. So here's Disney. We'll talk about Disney for a second, and then we'll get off of these large caps, start looking into some ideas for next week, and then we'll talk about the short cover plus. So Disney beat, right? They hit both. So last earnings, they absolutely just folded, and I played into last earning because I got smoked. I thought they weren't going to beat, they weren't going to miss, and they missed both, and they got smoked. Everybody's anticipation this time was going to be a miss. Everybody, all the chatter I seen was misses. I seen on CNBC people talking about miss. On Disney, I seen a couple different people were a lot of people were betting against Disney.
Disney and earning. I got you.
But yeah, so a lot of people were betting against it. They hit both and crushed it nonetheless. And what had happened though, because we've been seeing this too a lot with these overvaluations, right? You see, Apple crushed, right? Microsoft, or I guess they didn't crush, but they had modest beats. And what happened is you see them knife, before the earnings drops real hard and then just rip. And that's what happened with Disney. So I noticed it hit. I forget. I think you told me Disney was reporting, right? And then here it is. Was that it? Or where's the knife at? Oh yeah, earnings right here. So I guess they don't have the knife on here for some reason. But anyway, it knifed down pretty hard into the 40s, low 40s, 42, and then it just shot up. I don't know why. Oh, you know why? My after hours and there we go. Where is it? Extended hours. There we go. All righty. Now let's see. There it is. There's the knife. Okay. So there it is. So yeah, knife down. I caught this knife almost perfect, a little bit higher on the bounce here. On some shares. It was after hours, so we couldn't catch any contracts, and it just roared. It was a clean $10 move, a little over $10 move. I sold it right around here. That was a fun one to play. So Disney, and then it's just been an all-day fader. So remember last week we were talking about the big earning beats, and then they fade. This is what I was talking about. Earnings crushed, and then just fade. So that's pretty much concludes large caps for this week. What we've seen happen, and some of the ideas we have for next week with Affirm and Cisco. Now let's talk. You want to talk about your short cover dividend strategy?
Yeah.
That he had taught me the secret sauce, and it's great for quick hits, especially on special divvies. I feel like are the best ones, right?
Thank you. Yeah, and I'll
Bet.
have a strategy like for a normal divvy stock.
You have a
But
different one for a normal divvy, but for the special divvies, a lot of the times what happens is, they get a huge run up, when the divvy's announced, and then all the way up until the closing date, it'll sell off. So it's really easy to short, cover, plus, and then you collect the divvy as well. So the short, you get paid on the short. So what was that stock we did it on? And we can show an example.
SSBI.
SSBI or PI?
Yeah. D as in boy.
Got it. So Summit State Bank. Got it. Perfect. All righty. So
special divvy was 10-1 free share.
It was huge.
Yeah,
I remember it was ridiculous. The divvy was ridiculous. So which one was it? Was it because they've done a lot of fucking divvies?
Yes. I know it's a great divvy stock in general. And you know how I love my divvy drip.
Yeah, look at this. They've done so many of them. 36 cents a share at $15.44 a share. They're doing divvies all day.
Yeah, absolutely.
Oh, is this it here? Nope, split. Oh yeah, that was it. The split, remember? It was splitting.
5-4.
Yep, that's it right here. So it was up here. I mean, this chart is really, really hard to show it on, even on this 15-minute. But so this was when it happened, when we got paid out for it. This is on the 15-minute. I don't know why it's so choppy like that. Let me try the hourly. It's still choppy. It's because it doesn't have a lot of volume on it during the day, but whatever. So this is when they paid out the divvy right here. The 5-4. They gave like $10 a share, some crazy shit, right?
No, if the stock was
or an extra share for every 10. For every 10, you got an extra. I got it. Yeah, I remember. Okay, so we started looking at it.
It was about a week and a half before.
Yeah. So where is it here? So we're looking like over in this area, right around here, right? Because we shorted it up. Wasn't it in like the 20 range? Am I looking at the wrong chart?
14. It was around $14 a share.
14 up here. It was right around here. Somewhere or up here. No, because that's afterwards. Or did they announce it this day? March 15th. So yeah, but anyway, so this is the point here. Regardless of the date, what happens is you take the short position, you cover down. If you take it up here at 13, you cover it down here in the 10 area, let's say. And when you cover, you do cover plus. So let's say I take 100 shares short here, and then I cover plus 200 shares, or however much my profit is, plus the amount that I initially invested in the short. So if I got $3 per share profit, it's about $300. So I cover plus $300. So I end up, pretty much flipping your whole position plus adding 300 short. And then this way you keep accumulating shares. You do it again, cover plus for free, for free. And then at the end, you collect that special divvy, and most of the money you've got in, you've already, rinsed out profit on.
It's already free. So all those shares, every 10 free share you got, they gave you an extra share. And what was beautiful about that, the X date on their actual dividend was that Thursday.
Yeah, it hit twice.
Yeah. So you got that.
I remember that.
You got your 14 cents a share.
This is a great stock here. Look at all these divvies from, geez Louise.
Yeah. It's a solid dividend stock.
And they're big dividends. So, if you're watching this, you like divvies, this definitely look into SSBI just in general. It might not make huge moves, but you don't want a dividend stock. Really, dividend stocks are great for this chop when they, when the market's just chopping sideways. You've got dividend stocks. You're printing still.
Mm-hmm.
But yeah, so we caught this one. We played it. We didn't play it for the for the regular divvy. We played it for this split 5 to 4. For every 10 shares, we got a free share, I believe it was.
Mhm.
And then it ended up being pretty nice. We just kept accumulating until we hit it short cover plus. That's another good one. That's a good example, maybe a better example that has the divvy.
So, short cover is something I use specifically for special dividends, but I also use the strategy for dividend stocks, just because I like to accumulate free shares. Now, the dividend capture strategy is something that a lot of traders use to capture dividends. Most traders don't hold dividend stocks other than to capture the dividend and get out. The thing about dividend stocks is your X date is the last day that you can be hold the share. So you have had to have bought it your T+2, so it's settled. So it has to be settled by the X date. Now, most of the you're going to get a huge sell off. Oh, I mean, not a huge sell off. You're going to have a sell off once they have somebody trapped in there because they know they have people trapped for the divvy and they have to hold to record date.
Yeah, like
Yeah.
Torch, right? Didn't that happen with Matt or Torch, whatever stock it was? They got all retail, pretty much trapped, and I know a lot of people still holding that stock, waiting for their dividend.
There's great dividend site. I believe it's dividend.com, but one of the statistics that they use is called DTR, days to recover. So it keeps an average of how long it takes those shares to recover the sell off from the dividend. So when they short it off, so most of them will be in between 3 and 5 days, so where it will recover to where it was. So that's something you want to use for a dividend capture strategy. However, if you're a bear like Mike and you want to play against that strategy, you can play both sides. Yep. Knowing the dividend date, you're going to have a run up. You know when they're going to be there, and they're going to get trapped. So that's a great short opportunity if you just want to short on dividend stock. You don't use.
I know. With BBIG, right? They had the special dividend, and this was, I was, starting to become bear when it dropped, but like this swing short here when they, like this was a huge trap on this. This is one of the biggest ones I've seen, and I know a lot of people still holding this bag from the nines. This isn't even the nines yet.
12.
Yeah, 12 even, exactly. But if you swung it, that dividend still hasn't even closed. Like, their PR team is something like
you want to be very careful about with dividends. It's about reputation. If you have any questions, please DM me. I've been doing dividends for a decade.
This is definitely the guy to talk to about dividends right here, for sure. Is Heat.
It's accumulation.
Because I bet you weren't holding this bag on BBIG for their special dividend.
No, I'm not, but BBIG will be all right. Those dividends will allow a lot of people to get out.
People in this area, the 5, 6, 7 area for sure. Yeah. But anything $10 and up, $9 and up, like even that dividend won't make up for this loss unless this was a beautiful chance here when it ran here. Like if you were holding this bag here, as soon as this broke right here, I would have been averaging the fuck down as hard as I could.
Or triple my position.
Yeah, triple right away. Triple my position right away. You would have been able to get out right here. YOLO the whole account and gotten out. But some people couldn't do that because I know, there's a couple people and not just, there's a lot of people. Like I see them, they're like AMC holders in this stock.
It is. There's gonna be a lot of people. There's always gonna be that new retail investor, right?
Yeah.
People get new jobs, people turn 18, people, it's going to happen every day. Naivety. Yeah. You don't know what you don't know until you get smoked on something.
Yeah, you got to get smoked. But I did chart this. I'm not going to lie. I charted it this afternoon. Somebody asked me to chart it, and it is forming, a nice little wedge here. So it could end up breaking out. But this is besides the point. We're going over dividends. Yeah. This is a special dividend trap that I wanted to show. That's all. This is the announcement here of the dividend as this huge run up. And then they still haven't even released the dividend, and it's gone from all-time high of 12.30, 12.50 down to, almost under $2, $2.10, $2.20, right around that area. That's $10 sell off on the, that's just the type this is the type of sell-off you can get caught in if you're not careful with the special dividends, is what I wanted to show.
Dividend need a reputation, you need stability, you want history,
Something like this, right?
That's a gimmick. So ORC, right? That's one of my favorite dividend stocks. It's great, stable, they always pay. They're based in property-backed mortgages. So like actual
chart,
mortgages.
I pulled out Coca-Cola because I know they're one of the best divvy stocks. But what was the one you were talking about?
ORC, Orc Island Capital.
Oh yeah, Orc. You always preach an Orc.
It is, and they're stable. Their range is in between like $375. It doesn't ever leave that. It did once, and it was just some ridiculously horrible sell-off. I don't know what happened.
Right here you're talking about. So that looks like it was COVID. It was March 2020. That's what that was.
Yeah. So that was,
and it didn't even leave it for long. It hit $1.50. Like if you were someone like you who loves this dividend stock and you caught that dip, like you're sitting handsome now with all these divvies plus.
I've got several. I'll call it several thousand shares. But the mortgage company, and that was the announcement when they said the mortgage amnesty, right? You're not going to have to pay your mortgage. We're not going to kick you out of their house. We're not going to do whatever. And if you're a company that relies on income, people paying their mortgage, that's why that crashed.
They do a monthly, right? So this isn't a special dividend. So why don't you tell the viewers what the difference between a special dividend and just a dividend stock?
Yeah.
Go ahead.
So a special dividend is that companies specifically announce, basically is like a gift or a bonus to people that hold their shares. If a company has a killer year, FBI, right? That was a special dividend because the bank had, I want to say it beat its earnings projections by 5%. So, they almost doubled what they expected. So they were giving out free shares to everybody. Dividends themselves are you getting a piece of the profit from how that company operates. They don't usually move much because most of because profits are being paid out per share. Orc is my favorite, simply because the ratio that you get off of these shares, right?
Plus, it's a cheaper stock that's got a monthly dividend. You can load a good bit of shares in because dividends go off a share, shares, not a dollar amount.
It's great. So if you pull up your hourly, you can see it'll take that dip on the 28th-ish.
Oh, yeah, right before the divvy, huh?
That's the ex-div date dip.
Yeah, so right there.
Go down and cover, and you'll see it will recover after a couple days. So you'll have days to recover. It's in a recovery right now from the dip from.
So if you look here on the chart, I've got the past I got like the past 10 divvies. So you got this one here where it knifed down and then it recovers up. Same range, dips down for this next divvy here, recovers up, dips down into the next one, recovers up, dips. This one kind of just chopped these two. I guess this was probably more of a choppier month, but then you see these last three divvies, right? Chop down, recover, chop down, recover. And now we're in this one right here, this January divvy.
Over on that divvy specifically. You can see that nice trend line forming on the bottom right there. Nice price change. I like
about right here.
Yeah.
Got you.
So
yeah, it's wedging a bit. Some would call it, it does kind of look like a bear flag, but because of the stability in the stock, the dividend, this won't stay down here. It'll pop out the other direction, in my opinion. probably right up into earnings, because I was looking back. They had a couple bad earnings, but it looks like they pretty much hit a lot of their earnings reports. So
Orc is going to boom whenever they raise, whatever rates rise. These finance stocks that rely on the interest income are going to rise.
yeah,
So that's look forward to. Now, great time to get in Orc. 3.9. I want to say my average is around 3.7 for everything I have. I mean, I've bought it at 6 and I bought it at $1.50. So it's not about what you pay for it, because they eventually pay for themselves. Orc is a monthly dividend stock. It pays a dividend every month on 30 days after your X date. So if you had the stock last month on the 28th, receive that dividend on the 28th of this month. So it pays a month out. See what I'm saying?
yeah.
Kind of like have to work 2 weeks and don't get one. It's like that. But the more you can accumulate, the more dividends you get. Just like your play with Sims, right? You just milked it. You think about if you say you hold Orc for a year, right? Right now, the dividends 78 cents on the year at 3.91. That's what, 14%, give or take.
Yeah,
six and a half cents a share per month. Say you own 100 shares. So that's 78 cents on top of 3.91. What is that? 4.69.
yeah.
So that share is going to be worth 4 at the end of the year, based on holding it. It's the projection, or you can look at it as it's taking your cost of entry down. So, and every month.
And that's the same. It's kind of like what you were talking about with my thing with Sense. So I got in Sense, sub $2, and I know it just had that FDA approval sell off and whoop-de-doo, but I'm up over 6,000% on the position. My average cost, because of all the premiums I've collected on covered calls, is like less than 50 cents a share.
So about it this way. So 3.91, right? Say you hold it for a month. Take 6.5 cents off of that. Hold it for another month. Take 13 cents off of that. Hold it for another month. 18.5 cents. So, I mean, your cost per share goes down. So you don't necessarily have to worry about the actual equity itself losing value or rising in value. I'm not selling my shares. I don't care if it goes to 10, because they send me 14% a year.
Yeah, so it's kind of like, this is a good point to bring up, and then we'll get into our our closeout. We're getting close to the end, but this is a good point to come up. In markets like these are safe ways to make money, right? To remain profitable, even if it's slow money, even if it's just a little bit of money, but you're getting 14% on this stock a year, and same with covered calls, right? So monthly dividends on a stock with range that's pretty minute. Like, you're not going to see too much up and down, as long as you can get in on the bottom end of the range, like where it's at right now. This, even with the market crashed, kept crashing, you won't see much more than maybe $1.50, which, like you said, it's going to recover. Plus, you're going to get 14% every year. And it's the same as if you're bag holding positions, and let's say you came into January thinking I'm going to snag all these swing trades, and now they're no longer swings, and you're a long-term investor.
Exactly.
If you've got options on those plays and you've got over 100 shares or a few hundred shares, you should be writing covered calls on that position, because you're collecting money, not only lowering your costs, but you're collecting money, keeping yourself alive in a market like the one we're viewing right now.
Really get out. Sure. I mean, as long as somebody doesn't execute their shares, which it doesn't
But
really
if they actually, so that's a good point to bring up. So when you do a covered call, you should always have the contract over your average cost per share. You should never write covered calls against your position under the average of your cost, because you can lose that way. That's like the only way you can lose on the position. But if you write them over the cost of your average, I mean, if they execute your shares, well, then you got out of your bag.
Yeah. And so, I mean, and you still get your premium.
And you still got the premium. So you got all the profit from the shares plus the premium. So,
I would never write a covered call for anything less than you're willing to take for that share. Because
exactly.
they can take and will take your shares.
Yeah, exactly. But you can also buy out of the contract as well. So you can stop that from happening. And that's, we can go over covered calls another day because there's a lot of moving parts to it.
Mm.
I do it on a couple positions that I have, right now. I've got, T, I've got Sense, I've got Joby, I've got quite a few that I'm writing and collecting premiums on,
They're
pretty monthly.
great stock of volatility. It's like cents, right? You got big spikes, big dips. It relatively for the price of the stock, right?
Yep.
I mean, talking about 275 to 425. That's a huge percentage range.
Yeah, we'll pull
But
up Sense too.
yeah, I mean,
No, but what sense too is so with any kind of cover call, like I said, we'll go more in depth on this another time. But you always wanna wait to sell the contracts to write the contracts on these spikes. You don't want to sell contracts on the knifes. You're gonna get a lot. You're gonna get left next to nothing on the knifes. You'll get a lot more. Your premium will be heightened. It'll be be more. You'll get more money when you sell it on the spike. So well, if you do end up taking this advice, grabbing some divvies, you want to grab it at the bottom of the range, right? We want to get it at the bottom of the range. And then you're going to
and
also want
yeah,
to, and you're going to want to sell your calls on the spike. So,
yeah. That I personally like. I know people were talking about 401ks, IRAs, long that like this is something you buy and forget that you own, and you'll know or check up, like keep it on your watch list, and you see it down 20%. That's a huge fire sale for me when I see that. It's like, oh, okay, I'll take more.
yeah.
In you every month, and it doesn't happen that often. Like that big divvy drop you saw that was like $1.20 or whatever on Orc. That doesn't happen. So that's a huge buying opportunity. And I know people will panic, say, oh my gosh, a 23% drop. Then they're worried about the actual cost of the equity. You're not worried about that trade. That's a buy and hold. The longer you hold those stocks, the cheaper they get with you. Like T. How many shares of T you got right now?
How many shares of T do I have? I got like three,
AT&T.
yeah, 3,000 shares or less.
3,000.
Yeah, not a lot. I mean, I loaded that dip. I was waiting for another big dip to load more with my dividend money. So what I've been doing with T is I collect premiums and dividends on it, right? So I'm selling contracts plus I collect the dividend on it, and I'm setting that money aside to accumulate every time it knifes down and dips more shares. So I'm doing it a little bit long term on my scaling, because it was at an IPO price. It was lower than IPO price when we got in when you told me to get in.
AT&T, I mean, it's in a great range now. Old AT&T's a great stock. They're not going anywhere. They're 24,130 now. So we got in. I got you at like 23.50 originally when I told you, hey, hop in here. It ran to 33.83. I unloaded my entire position, and I entered back in at 25. So I just accumulated more shares. The amount of money is uh, it's what's the word I'm looking for? It doesn't matter, right? It's irrelevant. There we go. The amount of money is irrelevant. It's the accumulation of those shares. I need more shares than I had before for the same amount of money, and those shares pay dividends. They're not going to go anywhere, and they're going to spike again, and they may sell off again. But I will just keep accumulating those shares, like McDonald's, Starbucks, all your those Walmarts.
Yeah,
They're
I
not.
caught in. So I pulled up T, right? So I got in down in here. This is where me and you got in. We are in like the low 20s, right? Or at least when I got in. I don't know if you were already holding. I don't know if you were already holding, but yeah, that's when I got in. And if you go all the way back to its history, I'm pretty sure we were in like it was pretty much near IPO price or even lower than its IPO price.
Like you don't. This is a huge discount, and that's why
Maybe not IPO price. Okay, it's been a while. I was thinking what I was thinking of? I was thinking of Twitter.
5.
Yeah, can you not see it?
No, I just dropped off.
Oh shit! Hold on, sorry. Okay, You got me now?
Yeah.
Okay, so we're looking at T-Mobile here.
No, AT&T.
I mean AT&T, excuse me, sorry. And this is one with dividends and options. So
It's a 9% dividend, or 8.62. So it's great. Anything over 7% dividend is ridiculous. That's guaranteed 7% on your money every year. Growth.
yeah,
So just like Orc, I have have a very extensive list of dividend stocks that I own. That I've done extensive research on. You have to be very careful about which ones you buy because some paying dividends based on a lot of factors. I have a very nice accumulation of very stable, very reliable dividend stocks that are all from anything in the 7 to 17% range. Be careful with dividends because if there's a dividend with more than 15%, I believe it's 15 or 25. I will double check that. But if you see an outrageously high dividend, it has a much longer hold time for your actual date of record. So you'll have to hold it longer if you're looking for a dividend capture strategy. But that's something y'all can DM me about. I'll go over it with you. It's like I did with Mike. And I mean, it's like Mike had never heard anything about the SSBI. It just opened his eyes. Free shares, right?
yeah, exactly. It was free money.
Are you still holding them?
No.
Well, if you would have took those free shares and put them in your long-term account, like we talked about, you would be collecting all those divvies right now, and you'd be up what $2.40 per
Yeah.
share.
Yeah, no, I probably should have kept holding, but I just took the money and ran.
I understand. And it's either way. I value the future of what those stocks can bring, because I mean, you know how I made my money.
Yeah.
So I'm becoming a very successful trader, but I'm a far superior investor and long term hold. I've done very, very well there, but they're the way you have to think about how you're evaluating trades is going to change with every type of trade that you take and what your intent is. So I know a lot of people here are worried about dollars. Like I say, dollars don't make sense.
Yeah, we put that to bed too. We won't be talking about dollars much anymore. The only time, especially when you're trading with other people, like you can never compare yourself to somebody else because we're all on this journey and in different chapters, right? So, the only time I ever really you should ever really even talk about dollars is if you're like a share trader of large caps, like a day trader that trades large caps, because you don't get, big percentage moves. You're going to get, that's how I track my trades on large caps, which like I mentioned in the last podcast, I just started learning how to day trade and scalp large caps. And it's been super, super profitable in this market that we're in. A lot of volatility, a lot of volume on the large caps right now. When the small caps are weak, it's because big money's trading large caps. And I'll map my gained P&L on how the dollar move of the stock. So like I took Disney, for $10 move, I'll say, but I won't talk about how, there's no need to talk about how much money you actually made. Like I see a lot of these FinTwit people on Twitter posting screenshots of their $1 million P&L. And it's like, good for you, bro. But like, how is that going to benefit the guy with $200 in his account and is just trying to learn? Because that's just going to intimidate the hell out of somebody like that. And it's going to do the complete opposite of what we're trying to accomplish.
Keep trading accounts, man. They're not playing. You can never really tell when somebody sent a picture. Take everything you see and hear with a grain of
salt. Yeah. But with that, I believe we're pretty much out of time here. This was a good informative episode. We started talking about SPY, got into some large caps, went over a dividend strategy, talked a little bit about covered calls. Like this is definitely a lot of information, digest it. If you guys got any questions, you could, like I said in the beginning, join the Discord if you're not in there already. If you are, you could DM either one of us anytime. If you've got dividend related questions, don't DM me, DM Heat. he'll work with you, no problem. I know he's quick to answer, just like I am. If as long as I'm not busy, everybody knows I respond. But it's been a pleasure. Once again, we're not financial advisors. Just for fun here. We're doing this for free and for fun. Like and subscribe. Hit the like and subscribe button. Help us grow. And any final words?
I mean, no, I mean, if you like making money, definitely check out the Discord. Tell your friends. Invite whoever you want. Honestly, we joke around a lot. We're serious about making money, and it's what bad apples can get weeded out. Some people aren't going to make it. Some people will. We welcome everybody that's willing to learn, willing to try. Like Mike said, we just pays us. We don't need your money. Like Wonder said, we're just looking for good vibes and profits.
Exactly. Yeah. No, we're not in the business here. We're not doing this to make anything off of it. Just we want to see people, like we've seen this week in itself. There's a couple guys that I've seen in our group that came in. One dude, I'll shout him out, Golf Kid, right? He came in, he got smoked. He got smoked last time the SPY pulled back. He was like ready to quit, and now the dude's on a complete breakout, and he's just crushing it every single day, calling out his own, trades in the chat. We're building fishermen. We're not handing out fish. That put it that way, because that's exactly what has happened with someone like that. He came in, got smoked, and now look at him. He's profitable consistently, and we're seeing that with a lot of guys and girls. So we're not just all men, we're all guys and girls. So definitely hit the link, join us, and come have some fun with us, make some money. And with that, it's been a great episode. I hope everyone has a great week. And once again, this is 2/12 of 22 that we're filming it. So I'll probably have it posted up probably Monday, Tuesday area. And with that, that's it. That's all I got.
I hear you. If y'all are still here, check out the next guest we have coming on. Excited. I think Mike can go ahead and announce that.
Yeah. So next week, join us next week. We'll have Luna, which is our crypto queen, we call her. She is she alerts all our crypto trades in the chat. She's solid with the crypto game. So we're going to do a lot of diving into the crypto markets, checking out, any predictions on the markets itself, some stable coins, some of the other unstable coins, and the shit coins. We'll get into it all. So it's going to be a fun episode. We got Luna. I've been trying to get her for a while, and I finally was able to convince her to join us. And then we got a roster coming up for you guys. So we got a couple solid people coming onto the show, and we're going to have some fun.
All right, guys. Have a good day. It's been a pleasure.
Have a good one.